Hello everyone, welcome to Bald Guy Money. I am Bald Guy, and I want to talk about the US national debt, which today, according to the US debt clock, stands above $34 trillion and is becoming a serious point of concern not only for average American citizens, but for debt holders from around the world, many of whom are sovereign governments holding U.S. treasuries in reserve who are now looking for an alternative to the U.S. dollar because of the perceived risks associated with it. Case in point, this is what Vladimir Putin had to say on the topic in his recent interview with Tucker Carlson on the platform X.
I think it is complete foolishness from the point of view of the interests of the United States itself and its taxpayers, as it damages the U.S. economy, undermines the power of the United States across the world.
Even Federal Reserve Chairman Jerome Powell, a man who always says it's not his job to tell lawmakers what to do, expressed his concerns about the sustainability of the debt in a recent 60 Minutes interview. And from my point of view, it seems that American politicians are the only ones who approve of this, while they abuse the privileges that come along with so much power over the reserve currency of the world. So in this video, I want to talk about these four things, starting with just how bad the debt situation is for the United States and everyone around the world who holds their debt, which is basically every country in the world. Then, I want to explain a bit about what happens if the United States defaults on its debt and the ripple effect it will have throughout the global market. As a third point, I want to show you all how the US government will try to avoid this default and a global economic meltdown. And we'll finish with proven ways to protect yourselves both from the illness of the debt as well as the radical cure to the illness with specific examples. Just before we get into it, if you're in the USA and want to buy gold and silver at a great price from a dealer you can trust, please check out channel partner Pimbex. They offer everything anyone looking to protect the value of their savings may need, as well as gold and silver IRAs at their amazing prices without high fees or predatory price spreads. Just please remember to let them know you came from the Bald Guy Money channel. Now, jumping back into it, the US debt, as I said, has gone above $34 trillion. And in nominal terms, it seems to be making parabolic moves to the upside, as indicated by the angle at which each of the arrows in this image are pointing, and each arrow covers 10 years, starting from 1970 on this chart. Now, we're going to switch over to this chart, which shows the debt in relation to GDP, and I have overlaid the same arrows from the nominal debt chart to this graph because what politicians and left-leaning economists will argue is that as economic productivity keeps rising, the nominal size of the debt doesn't matter because growth in the size of the economy will grow tax receipts, which will offset increased spending. And although that may have been the case in the roaring 90s, when the USA famously had a surplus of $70 billion in 1998, looking at this data set, you can clearly see that has rather been the exception since 1970 when the US went off the gold standard and not the rule. And with the four largest budget items for the United States now representing 102% of total tax revenue, this trend of growing debt versus GDP isn't expected to reverse itself anytime soon, with some estimates putting debt at 181% of GDP by 2053. But I expect this to go up even faster, especially when we consider the fact that we are seeing more and more good-paying, highly taxed, white-collar jobs being lost to AI. Computer systems that certainly deliver productivity, but don't pay a penny in taxes for that productivity. And for that reason, my assessment of the US debt situation is grim. Not only do I expect debt to grow quickly, But AI and wage stagnation will likely make the problem of repayment even worse than it is today, which forces us to ask the question, what happens if the USA defaults on its debt? Well, from my point of view, there are three realistic scenarios if it comes to that. The first being that the United States will negotiate repayment terms with friendly borrowers like Japan, which is the largest foreign owner of US debt, the UK, which is number 3 on the list, and so on and so forth. But this option, along with the second option, which is selective repayment of obligations, meaning some debt holders get paid and others don't, result in the exact same thing. A major loss of trust in the USA's ability to repay its debt, a major increase in the cost of borrowing money for the United States, a huge devaluation of the US dollar itself, all of which will have a tangible negative impact on the quality of life for each and every American. Because taxes will go up as the government tries to shore up cash to fill the holes, the cost of goods will go up with the devaluing US dollar, and public services and payments delivered by the government, like Social Security, for example, will have to be cut, something I covered in a video about Social Security a few months ago. Now, where things really get ugly is if the government totally defaults on its debts, because although a partial default will certainly make things difficult for the average citizen and drive a global economic downturn as large amounts of foreign-held US debt become worthless, leaving foreign creditors hanging, a total default will simply wipe out the entire financial system. It will result in the increased cost of borrowing for every person and every country on the planet as the perceived risk of lending money goes up. That will drive borrowing down and result in less economic activity on a global scale. Maybe worst of all, for many people looking to retire, it will wipe out their retirement savings. Not only on a private investment level as turmoil crashes the stock markets due to reduced economic activity, as I just mentioned, but remember, many national pension funds hold US debt within it, meaning there would be material losses there too as those holdings go to zero. And because of the apocalyptic consequences of that happening, nobody will let a total default like that happen. That is the simple truth. And it's why countries around the world are slowly reducing their dollar reserves in favor of things like gold. And it's maybe also why you've heard recently that some of the US debt auctions have not performed as well as in the past. And that brings us to the question, how is the USA avoiding default, and how will they continue to dodge a disastrous default moving forward? And this is important. But just before we dig into that topic, I want to introduce you all to the sponsor of this video, Alaska Energy Metals. Because I've been talking about the opportunity that I see in the mining sector for the past few months, and I sincerely believe that the sector is underinvested and poised to deliver some serious returns as we exit a 10-year bear market in mining. Now, this is an interesting and unique opportunity that revolves around the green energy revolution that many silver stackers are already well aware of. We know it is an element that is driving demand for silver up. But this opportunity with Alaska Energy Metals, and you can see the ticker symbol right here on the screen, revolves around nickel. A metal that, as you can see in this image, is an absolutely critical ingredient to many things that we use in our daily lives, as well as technologies of the future, like electronic vehicle batteries, which contain 29 kilograms or 64 pounds of nickel inside, which means it is a larger component of the battery than lithium, which is something that some investors have done very well on over the past 5 years. Now, why I say this is an interesting opportunity is because some pretty big market players are starting to move on nickel, including Elon Musk, and he really sounded the alarm on this issue back in 2020 when he said that nickel, or the supply of nickel, was Tesla's biggest concern. It even pushed him to start cooperating with nickel miners directly just 2 years later. And Elon Musk isn't the only big shot who is quietly investing in nickel as it becomes increasingly important and increasingly difficult to get. Because Bill Gates and Jeff Bezos have both invested in a company called Cobalt that used AI technology to identify the best places on Earth to mine nickel. And literally just 6 days ago, after I had already agreed to work with Alaska Energy Metals, I saw this article saying how they've struck gold on the investment. Well, isn't that a coincidence? Because the piece of land that Alaska Energy Metals lays a claim to borders the cobalt land, and it's an area that geologically looks like an area in Russia that is known to have the richest nickel deposits in the world. And with very few good nickel mines located in North America, today 75% of nickel is mined in Russia, China, Philippines, Indonesia, and New Caledonia. And as companies not only try to shorten their supply chains, but also mitigate risks associated with international conflict, this US-based Nikolai project they're working on that you can see on the screen could end up being a very lucrative investment, and I am putting a little of my own money behind it. So if you're interested, I suggest you check them out at their website to learn more about what they're doing, and that website is alaskaenergymetals.com, and their ticker symbols are also right here on the screen. Of course, this is not advice. I am only telling you what I'm up to, but I think it's worth your time to research a bit, and I want to give a big thanks to Alaska Energy Metals for cooperating with the Bald Guy Money channel. And now back to our discussion on US debt. So, as I said, it is not in anybody's interest to crash the US dollar system as it exists today. Most everybody, except for maybe a few of the more wild Bald Guy channel viewers, prefers a gradual move away from the US dollar. And that means as the debt rises, the United States will fill the gaps between what they take in tax revenue and what they spend in two ways. The first is borrowing more money, which kind of sounds like paying off one credit card with another and sounds counterproductive, but it is happening. And for every extra dollar borrowed and paid out, extra dollars are being entered into the financial system, creating more inflationary pressure. The other way the United States government pays off debt is essentially printing more money. This happens when the Federal Reserve agrees to purchase US debt with money it has created. And if you're wondering how much US debt they own as of today, that number is right around $6 trillion, which represents 18% of the $34 trillion I showed you at the beginning of the video, which is massive compared to the 8.8% of the total US debt the Federal Reserve owned in 2000 as the US and global economies exited the productive and positive decade of the 1990s following the collapse of communism. And no matter which one of these options you select, they both have one very evil consequence, and that is inflation, which, as you can see on this chart of global inflation rates, usually grows faster outside of the USA than inside the USA itself. And for all of my international viewers who ask me why I cover the US situation so much in my content, this is why, and I will try to explain it in as simple terms as possible. As more dollars are created via borrowing and printing, it means more dollars are chasing the same amount of goods. That drives up prices on the global market and reaches non-US dollar countries later, which has a higher impact on inflation rates in those countries as opposed to the USA, because it's the value of the global reserve currency that ultimately has the highest impact on global prices. And the further down the line you are from the dollar printer, the higher inflation will typically be in your country. Now, to close this loop, the only thing that will protect you from this are real assets. And it's why I always encourage people to put their money to work in appreciating assets, be it gold, silver, real estate, Bitcoin, or productive companies. Because the value of the currency in your bank account, and I'll bring up the global inflation rate data again, is guaranteed to go down in value, as it has every single year since the year 2000, and is expected to continue doing so every year moving forward. And that point ties in very well with this video's viewer question, which comes from Mr. Douglas Bird, who asked, do you think the US Fed will revalue gold? Well, Mr. Bird, based on the data and the chart of the value of gold in US dollar terms, they are revaluing it on the open market every time they expand the money supply, which is something I have demonstrated they cannot and will not stop doing. And what we have to remember is this. It's ultimately not gold that is revalued as it goes up in US dollar price terms. Gold actually maintains its value. It is the value of our currencies that is falling, and why I say to keep only as much cash as you have to while protecting it in more productive places and in finite assets. With that said, that's it for this video. I appreciate you all watching. If you enjoyed the content, please like and remember to subscribe for more Bald Guy videos. And until the next time we see each other, everyone, take care of yourselves and take care of each other. Wishing you all a fantastic day ahead. Goodbye.